Investors and traders, welcome to the channel Market Chart Pattern. Today is 29th of October 2023, and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US stock indices. We will also cover the bond market through the lens of the Treasury bond futures, which will be mainly the long bond futures, the 30-year futures, Treasury future bond, 30-year bond futures contract, and also the 10-year Treasury note futures contract. Time permitting, we'll also take a look at the dollar index, and this video is for educational purposes only, and it is not a financial advice. So what we are looking at is the daily chart of S&P 500. Before we begin to talk more in detail about the pattern formation and the key price levels that we were watching for last week, let's go and have a look at the bond market. So this is the daily chart of the Treasury bond futures, 30-year duration. It is also known as the long bond future because of its long duration of 30 years. So here one of the things is that as we know, last week the stock market was under a lot of pressure, but this market has not performed that bad comparatively speaking. And in fact, the low which formed on the 23rd of October, so that's last Monday, the market did not take that low out. So this is an important development, because as we discussed in the last video that we had done, this market actually went as low as the 1.618% expansion of this entire range, and that's where it seemed to have found some good support. Now the first indication will come if it is able to break out of this bearish symmetry, whether this support is going to hold for longer. That's going to be the first indication for us. And then of course, if it begins to move into this range, that will be the second indication that perhaps this market has found a some sort of a bottom, which is going to be in place for a few months perhaps, and we could see actually a fair amount of points the market will actually trade higher. Just taking a quick look on the weekly basis, we were initially looking at the 78.6% Fibonacci retracement around 110 level. The market did go below a little bit because of the negative momentum the market was carrying. Now let's take a quick look at the Treasury note futures. This market is even bigger than the Treasury bond futures market, and what we are seeing is something similar. We see the lows formed on the Thursday, 19th of October. Those lows have not been taken out to the downside, so in fact this market is a little bit stronger compared to the bonds markets. The Treasury note futures are actually a little bit stronger, or in other words, the support is stronger comparatively speaking to the Treasury bond futures. And the good thing to note in both the markets is that the bottoms were held and they were not broken on Friday. So that's something which I wanted to point out. Let's go back to the S&P 500. Okay, so we are going to take a look at the markets because everything is a flow chart of cash. Cash moves out of one asset, goes into another asset. And also when it comes to the stock market, we really need to take a look at the NASDAQ 100, which we'll just do immediately after looking at this chart, because that is one market which was leading all the markets lower last year, and it has been a leader this year. So certainly the stocks that comprise in technology sector, they have a huge influence on the markets. And also it's really been a handful of stocks which are mostly tech driven stocks which have been contributing towards the market gain. So and if you haven't had a chance to look at the video which we did, in which we covered most of the tech big name big blue tech stocks, please have a look. I will also post a link in the description and also towards the end of this video as well. So here what we were watching for was, after this ABCD formation, we were expecting the market to come down because of the ABCD pattern formation, 78.6% retracement. And at that time, what we discussed was that either the market is going to be strong, and if this 78.6% Fibonacci retracement is broken to the upside on a consecutive closing basis with strong momentum, the chances are it's going to go and actually challenge the highs. On the flip side, if we begin to find resistance, the market is likely to go into a pullback slash correction, and this is what we have seen so far. Now, one of the key things that we were watching for was this trend line right here drawn in red, and also a particular level which is the 38.2% Fibonacci retracement around 4182. And this was a key level for us, which we discussed in the last video done last week. And what the market has done is, in fact, it has broken below that level. So we need to take a note of that, and this is an important development, that our key level was broken down in this market. However, where the market closed exactly is on also on a 1.618 Fibonacci expansion around 4115 level. And what I'm going to show you now is that we need to also consider how the tech market, that's the NQ100, will take a look at how that market did. And we are looking at this zone around 4117 to 4100, where there could be a potentially good support for at least a bounce for this market. But based on the price action, we'll have to make an assessment whether that bounce might be just a bounce or something more than a bounce. But we'll have to take things into consideration based on the price action. So let's actually go and have a look at the NQs now. So here we are. So this is the NASDAQ 100. So here the key thing is that we have been actually looking for this pattern formation where we had 14,350 to about 14,050 as a region or a zone where the market could pull back into. And this is exactly what the market has done. And what is also to note is that it has come fairly close to the 38.2% Fibonacci retracement, and while the S&P 500 reached its 38.2% retracement first, this market, the NQ100, NASDAQ 100 E-mini futures, they were stronger because they have still not been able to actually touch that level. And we have this 200-day moving average just hanging around that level as well. And because of this, we have to really watch this market really carefully, that as it moves into a region where there is expected to be a pretty strong support, the other indices are likely to get influenced as well because of the move in the tech stocks. And you must watch the video. Some of the key stocks are actually trading at key price levels where we are witnessing a potential support to come in just because of the key pattern formations taking place over there. So also watch that video. So this is what we are watching this in this NASDAQ 100 E-mini futures. And the most important point is to actually note is here. So last Friday, so Thursday market has been coming down. Thursday market moves into the zone that we had been watching for. So that's the 26th of October. And the next day, which is the 27th of October, the Friday, what we see is an inside bar. We don't see this market even trade close towards the lower end of Thursday's candle. So this is something interesting to watch. This perhaps means that this market had more strength, and the sellers were not able to push for a new low at the end of the week in this market, but they were able to do that in the S&P 500. So we are just looking at the cash market right here. So there we go. And the interesting thing is that we see this market also closed right at a pattern formation, which could be a three drives to a bottom pattern formation. So again, putting things together, What we are watching for is that perhaps based on the price action in the tech stocks, there could at least be a pretty good bounce, if nothing more, also happening in the broader market. So this market has pulled into the area that we were waiting for. Now the two major indices that we are following have fallen into that zone, which is closer for the case of NQs, the NASDAQ 100 mini futures, very close to 38.2% Fibonacci retracement. S&P 500, the cash index, breaking below the 38.2% Fibonacci retracement, both pulling into a strong, relatively strong, or at least a strong support zone for per hour analysis. And we'll have to watch the price action next week. Next week is also non-farm payroll, and we also have the Federal Reserve with the FOMC decision coming out next week as well. So there is a number of things to watch for, and of course the market is under pressure because of the geopolitical situation as well. So pretty busy week, the next week, and also perhaps the week after. So these couple of weeks are going to be really important from a price action perspective, and we'll be watching the NASDAQ 100 index, the NASDAQ 100 E-mini futures really carefully. But as it stands, the indices have moved into a pretty strong zone, or their region that we were expecting them, and a pretty good, at least a bounce is expected from these levels over the course of next week. So let's also quickly take a look at the weekly chart of the Nasdaq 100 mini futures. We can see that comparatively, looking at the S&P 500, this is the structural support here, and that's way down where the market is at the moment. So it's stronger compared to S&P 500. So if we were to just do that here, what we can see is that this market has moved into this region. So NASDAQ 100 is a stronger market as we speak right now. Let's have a look at the Dow Jones Industrial E-mini Dow Jones futures as well through the eyes of YM. And here what we are looking at is that perhaps there is a chance this market moves a little bit lower, a few hundred points lower, around to perhaps 32,100, and it'll also be completing a three drives to a bottom pattern. Whether that level will hold or not, we'll have to wait and see. But there are quite a few things happening around that region. One is that we have the one-to-one price projections, that's ABCD, highlighted by this red line here. We also have a 1.618 expansion in close to that region, and of course the 78.6% Fibonacci retracement is where this market closed last Friday. But just because of the negative momentum, this market could actually move lower a few hundred points and right into this zone, which should act as a pretty good support. Whether that support will get held or not, we'll have to wait and watch the price action. And the other thing to note is that last time when there was a correction, this market went into a move lower for several months, and it will also be completing the same magnitude move as well, right into this key zone that we are looking at. If we just take a look at the Russell 2000, so this one has been pretty weak index. We'll take a look at this one on a weekly chart. It's now testing its lower end of the range here, and that will have a look on the weekly chart. So there we go. On the weekly chart, we can see that this index has been in a very long range. It's tested the upper part of the range a few times. Every time it found resistance. Now it's testing the lower end of the range, whether it will break out of the range or whether it'll find some sort of support and actually begin to trade into the middle part of the range. We'll have to watch the price action here. So guys, this is what we are looking at in our analysis for the key US stock indices. And one of the things to mention here is that there is a fair amount of pressure in terms of price movements because of the geopolitical situation, also because of the FOMC and non-farm payroll data coming out as well. So it's going to be a fairly busy week. However, the market is also pulling into the zones that we had been watching for, where we could actually find potentially good amount of support, especially in the NQ. So that's the NASDAQ 100 E-mini futures, as we have already analyzed this one. So next week is a key week, and although there is fairly bearish sentiment because the number of things happening, but as you know, we watch the price action really carefully, and we try to forecast key price levels based on our analysis and the pattern formations. And based on that, what we are looking at is that these key markets are actually they are pulled into regions which probably could act as potential good support. And we'll be watching the price action as it moves forwards, whether this support is held or is broken to the downside. If it is held, then if there's a move higher, what does that move look like, whether it's able to take the expected resistance levels out to the upside, which could then add more fuel to the upward momentum. That remains to be seen, and I will be doing more regular videos over the course of next few weeks to keep you guys updated. So if you have found this video of educational value, and you found our analysis by where we look at key pattern formations using Fibonacci retracements, price projections, expansion, extensions, and also the pattern formations, then please do subscribe to the channel. And if you found this video a good video from an educational perspective, do like the video. Thank you very much for watching the video. I wish you good luck and good trading.